Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 14th of January, it's 2020. So, yep, welcome everyone. Welcome to this Tuesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, also just before we jump into the charts, quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we update on a daily basis. So yep, I believe you can find a lot of useful stuff here for yourselves. So feel free to visit us here on jfdbank.com and click on the tab research right here. So now then, let's jump into the charts. Now the first one I wanted to show on here is the S&P 500. Now I haven't looked at this one for quite a while, but yesterday the index managed to create a new all-time high. So the index reached the 3,288 zone, but if we look at the cash index, I mean, it did move after hours, so the cash index did reach an area near the 3,296 mark. So basically it had a nice push higher, but looking at where the cash index is right now, it didn't retrace from that 3,296 mark, and now the price is roughly around the same place where it ended yesterday. So it will be quite interesting to see if it actually can retrace a little bit lower, or will it actually go for another all-time high. So that that will be, like I said, something to keep an eye on for today. But of course, don't get me wrong, one should remain careful, because again, we keep on hitting these all-time highs, and at some point we may see that little correction. But of course, at the moment it's difficult to try and capture that correction, because it seems that it's just one-way traffic for now. Overall, you can see that the index is trading above its medium-term tentative upside support line taken from the low of the 3rd of October, and in a way, even if we see this one retracing lower, and for example, if this one decides to drop below the 3,260 zone, probably, or 60-61 zone, most likely this would also, by the time this could travel lower, but it may also place the price below its 21 EMA here on the 4-hour chart, and then we could see the kind of the road getting cleared towards this upside support line for a quick test. So that's why for now, of course, be very careful. We will consider the downside only if we see a drop below the 3,261 zone. Until then, we are going to remain cautious and careful, because this in a way could continue drifting further north. So keep your eyes on this one, guys. It is quite interesting right now, and let's keep an eye on the developments around the phase 1 deal, phase 1 agreement between China and US. So let's keep an eye on that one, and as this may provide a bit of volatility, but don't get me wrong, this is coming tomorrow, something to watch out for tomorrow. But again, today we may see some maybe hints or just gossip or headlines around that, so be careful around with the indices. In terms of like deeper declines here, I mean, well, that's pretty straightforward. A drop below this upside line and a drop below the 3,212 zone. This is what we would need to see in order to see a further drift lower here, and maybe a deeper decline towards this 200 EMA here on the 4-hour chart. But again, for now, any kind of pullback here, any throwback here up until this upside line could be seen still as part of a correction. So keep your eyes on that one. WTI oil. Now I looked at Brent oil this week, but here we have WTI oil, which fantastically tested this upside support line taken from the low of the 3rd of October. You can see that it managed to rebound from it. Now the big question, can this continue holding? Can the upside line continue holding the price? Now, of course, for now, given the current rebound, yes, it seems that everything's still looking okay for WTI oil, for the bulls. But on the other hand, we do have the price kind of trading slightly below the 200 EMA here, and in a way, this could increase the chances of a further move lower. So, but again, in order for us to get comfortable with the downside, a drop below the 57.72 mark here, which is today's low, that's what we need to see in order to get comfortable with further declines. And for now, we're not seeing that. For now, we can see that the commodity is comfortably trading above this upside support line. So let's see if it can push higher. Now, for those who are more on the cautious side, what you could do here is just probably sit this one out and wait until we get a push above the $60 mark here, and in a way this would also place the price above its 200 EMA here on the 4-hour chart, and potentially also could place above all of its EMAs. So something to keep an eye on. This level here also marks the low of the 20th of December, so quite a decent area. Previously was seeing quite a decent area of support. Now could be in that area of resistance, which if broken could open the path towards higher levels. So keep your eyes on this one, guys. Ripple now. I've looked at Bitcoin, and similar story happening here. So Ripple is pushing nicely to the upside, and at the moment it's flirting with this little territory here near the 0.2255 mark. Now, in order to get comfortable with higher levels, we need to see a nice good clear push above this, and if we do see that push, then the next potential target for us here could be around the 0.2340 mark, which, as you can see, previously acted as a fantastic area of resistance back on the 29th of November and also on the 8th of December. So be very careful here, guys, but again, everything's kind of leaning more towards the upside, but in order to get comfortable with that upside, we need a push above the 0.2255 mark first, and then we will aim for higher levels. Until then, we're going to remain cautious here and wait for, like I said, for that clear break above this level. In terms of the downside here, in a way, we could start looking at this little low here that we saw yesterday near the 0.2097 mark, roughly around there, or in a way you could round it up towards the 0.21. And also what to consider here is this little tentative, short-term tentative upside support line, which also, if broken, could kind of lead towards further decline. So for now, there are some good potential areas of support and resistance. We are waiting for a clear breakthrough one of them, and I'll repeat myself, on the upside, we're waiting for a push above the 0.2255. On the downside, we need to see a break of this short-term tentative upside support line taken from the and let me just quickly adjust this, taken from the low of the 2nd of January, and then yes, a drop below the 0.21 mark here could do the trick here for more sellers. So keep your eyes on that one, guys. Jumping into a few pairs now very quickly, quick mentioning of GBPCHF. I've talked about this pair this week, or should I say yesterday, but basically what I was telling you guys to keep a close eye on this 1.2660 level, which was kind of initially acting as the lower side of the lower bound of this little range that we had, and you can see that it managed to break lower, managed to drift further south, test the 1.2613, and continue moving to the downside. Now, for now, still everything's kind of leaning more towards the downside. For those who are more on the cautious side, you could just wait this one out and wait for a drop below today's low, which is around the 1.2548, and then aim for this 1.2460 zone. Now, I do understand it's not far from this barrier, but still this is a decent level of support which could play out nicely. The reason also that, or should I say, another kind of thing that supports a little bit the downside here is the fact that it's trading below this little short-term kind of tentative downside resistance line, which in a way for now we'll keep it on the chart and we'll see if it actually holds or not. If it does, then yes, we will aim for another round of selling. But like I said, for those who are more on the cautious side, you could just wait for a drop below the 1.2548, because this would confirm a forthcoming lower low, and we could aim for this 1.2460 mark. In order to consider the upside here, well, to be honest, we'll take a pretty much conservative approach here. Not only that we'll wait for a break of this this downside line, but also now we're going to shift our potential breakout point here to this one right here near the 1.2766, which also coincides with the 200 EMA on the 4-hour chart. So basically, if we do get a push above this, this could increase the chances of GBPCHF moving higher, and then we'll examine some higher levels right here. But again, for now, everything's kind of still leaning more towards the downside. So let's keep an eye on how it's going to play out near this downside line, near this 1.2660 mark, and if it actually can drop below the 1.2548 area, which is the low of today, the current low of today. And if you can drop below this, then yes, it would confirm a forthcoming lower low. EURJPY. So I talked about this one this morning, and this is what I was telling you guys to keep a close eye on. Basically, we were still hanging around above this downside line, and but what I was saying that if it continues to hold, we may see a nice rebound here and a push higher. Of course, we did have initially a rebound, but as you can see, still the bears kind of took control here and pushed it below, and now the pair is trading below that downside line again. The only problem here is for us to get excited about the downside. Ideally, a drop below the 122.09 area, which is the high of the 1st of January. A drop below this area would do the trick, could do the trick, I would say, for more sellers, and we could aim for these slightly lower areas like the 121.36 or even below that. But for now, we're only going to aim for that area, for this 1.28, 1.2136 zone, because it could, let's say, in the scenario, if this level here, the 122.09, breaks and the pair starts drifting lower, by the time it could travel to this area right here near the 121.36, it could in a way also coincide with the 200 EMA on the 4-hour chart. So it's something to keep an eye on, good potential area of support. But for now, we're going to remain neutral because we want to see how this is going to play out. If by any chance this travels back above this downside line, then well, there could be a possibility for the pair to drift higher. The only thing here right now is, just to be on the safe side, probably we'll wait for a clear push above the 122.66 mark, and only then aim for the upside. So even if it pushes above the back above the downside resistance line, yes, this could increase the chances of a potential move higher. The only thing is, just for that extra confirmation, a push above the 122.66 could in a way do the trick here for more buyers. So keep an eye on that one. Something probably that you don't look at very often is that's your US dollar against the Russian ruble. Now for this one, let me just jump into a daily chart and just to show you what's happening here. So basically, it has been declining nicely here from the beginning of December. You can see that it managed to hit its 200-day EMA here, and then it sold off and continued to drift lower. But recently, it found good support near this little area right here. Let me just quickly put this one on the chart. So it found good support near the 60.8850 mark. So around there, guys, from which as you can see, it rebounded. It is now trying to make its way higher. Certainly, don't get me wrong, the whole trend is still more to the downside, as you can see here. So we can draw a bunch of tentative downside lines. So this one being the bigger one, which is taken from the high of the 3rd of September, and a slightly shorter term one could be this one right here, taken from the high of that of 2nd of December. if by any chance this gets a break, this shorter term downside line gets a break here, then this would also automatically place the rate above its 21 EMA, and then we could start targeting this other downside line taken from the high of the 3rd of September. So something to keep an eye on. But for now, guys, be very careful here. On one hand, yes, it continues to drift lower, it continues to trade below these downside lines, but on the other hand, it's finding good support here near this 60.8850 mark. And what we're going to do here now is we're going to keep an eye on this level. If we get a drop below this, only then we will aim for further declines, because in a way this would confirm a forthcoming lower low, and we could start targeting much lower areas. So for now, guys, keep your eyes on this one. It's a very interesting spot here for USDRUB, and let's see if it actually can make its way back to the upside. And the last pair for this session is going to be EURUSD. Now, we did get some data from US, so we did get the inflation figures, which came out as expected at 2.3%, the core and the headline CPIs. So we had a nice reaction on the dollar strengthened and managed to push EURUSD lower. So this is what I was talking about this morning. So basically what I was saying is, if this downside line let's say continues to hold, then there is a good possibility we could see a bit of declines here, a bit more declines, I would say, and we could see the rate drifting further south. But the initial idea was here to see a nice good clear drop below the 1.1111. We did get that drop, but as you can see, the bulls are really fighting it hard right now and trying to push the pair back to the upside. The only thing is, with the upside, for us to consider higher levels now at this point in time, we'll probably have a look at the high of yesterday's high, which is roughly around the 1.1147. A nice good push above this. This is when we will consider further acceleration to the upside. And but for now, it's leaning more towards the downside, because we are trading below this downside line. And I'm talking about the short term, from the short term perspective, because don't get me wrong, in the probably more of a medium term perspective, we do have this upside line here. You can see that taken from the 1st of October, from the low of the 1st of October, which could in a way break the fall here, and could keep the pair balancing above it, and we're not allowing it to drift further south. But for now, again, we're looking at this one from the very short-term perspective. For now, everything's kind of leaning more towards the downside. Let's see if the rate can drift again below the 1.11 zone. If it can, then yes, we will aim for the low of last week near the 1.1085. But if that fails to hold, then yes, this is what we're going to be targeting, the upside, this upside, medium-term upside support line. So keep your eyes on this one, guys. Okay, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me tomorrow morning at my Traders Espresso, that's always 7 o'clock GMT time. For now, guys, I hope you have a beautiful evening, and I'll see you later. Thank you very much, and bye-bye.